All
All right,
Thank you. Thank you. Just so I have it to reference as we're going along. Yes, this here, before I get too involved, let me introduce myself. My name is Christina Martin. I am the owner of TaxTackTics, which is an IRS-approved tax firm located here in the Antelope Valley. I've been in the tax industry since 2017. I have a horror story which led me into this industry, and so what I went through compelled me. Okay, I don't want anybody else to have to go through that. Let me get informed. Let me get under mentorship with a gentleman that developed me into the successful tax preparer that I am today, and be that advocate for one, for my taxpayers, be that individual that makes that impact, meaning I want your tax return to be an asset for you, not a hindrance. And so that's what I keep in mind. I am a type of preparer that I do probe, I do get in your business, but it's so that I can find you missing credits that you didn't think that you were eligible for, or it's to make sure that you can buy a home if that's a goal for you. They're gonna ask you for that tax return, so I want that return to be an asset for you in various ways. And so I think I covered it. I'm a registered tax preparer. Just giving it that, but you know what? As silly as it sounds for me to point that out, people are not registered out there and preparing returns. You can find me on the IRS website as an approved preparer. California has a specific certification to do returns in California. And so I highlight that to bring awareness, because there are what's called ghost preparers, meaning you pay them, they're on TurboTax. They will print it out, and they may have you sign it in person. There's various different ways that they'll send you an e-signature situation, and their name is nowhere on the return. And that's what coined the term ghost preparer. They just prepare it. If they send it off for you, or they mail it to you for you to send it off, but there's no history of them ever helping you. So if you have errors, you can't go back to that person. For one, you probably won't be able to reach them. For two, it's a reason for that. And yeah, I'm on Lancaster Boulevard at the office. It's a business suite, so that's where my business is located, but I work remote and I file in multiple states, not just California. So that's a little bit about me. Thank you. I always like to start off with some type of quote just to get us in a certain frame of mind. And so this one says, financial freedom is a mental, emotional, and educational process. So I commend each and every one of you for taking time out of your day and investing money out of your bank account, hopefully from the business bank account. So that way this could have been a tax write-off. And so pictures are a little bit out of order. Is anyone familiar with this cash flow quadrant? So the acronym is ESBI. The S and the I is down here, which is not shown, but it's all right. I'd like to highlight this because how you earn your money determines how you're going to have to pay your taxes on that money that was earned. So for this setting, majority of us are either in the S, which stands for self-employed, or B, which is the business owner. And so that's the two areas that we're going to focus in on just for a little bit of discussion. So we can go to the next slide. This is outlining forms that are used to prepare your tax return. This would be good to, if you want to take a picture, just for knowledge base. So next time you meet your tax preparer or professional, you can say, am I using Schedule C, or am I, elevate the language. They'll appreciate that. Actually, they're like, oh, your forms, So these are the common forms. Now, there are variations and more additional forms, but these are the main ones depending on what entity structure you have. So we've talked about sole proprietor. Can anyone give a definition of what that means to you, sole proprietor, and the formation of that business. Yes.
That you're like the sole owner, this, like, all of the responsibility falls on you, like you and your business are intertwined as one.
Yeah, yes, and that's key. You and your business are one and the same when it comes to taxes. It's all under that individual return. And when it comes to that liability portion or building credit, as we heard from Mary, you cannot build business credit as a sole proprietor. You must be an entity structure, so the LLC and down, partnership, S Corp, C Corp, corporations, that's the type of entity structure that you need in order to build that business credit. And there are forms associated to that, which, oh my, okay, there's an error here, 1120S, 1120, so I don't want us to not have the right information. I need to correct that. We could just go back for my reference point.
So those.
Because I want to highlight.
C corporation is 1120.
Yeah, 1120S and 1120. Those are the forms, not 10. 1120S is for S Corp, and 1120 is for the C Corp. Yeah. I just want to highlight the profit and loss statement, because this is the meat and potatoes of what write-offs could be and how it should be structured to some degree. Now, this is just one sample. There are various forms, and not all expense categories are going to be of need to you within your business. Let's flash forward. Let's move forward to the next slide. Yeah, just leave it here. Thank you. And so, how many of you all can produce a profit and loss statement today? If you were asked and needed to provide one, okay, so we're looking less than half, so about a quarter of the room. Okay, gotcha. A quarter of the room can produce that, and so you're either using some type of tax software, or maybe you have an Excel spreadsheet that you got savvy with. You know, hopefully you got some automation in there to some degree, where you're not having to pull in a calculator. But having this is what I ask my business owners for, to prepare their tax return. They're not sending me a box of receipts and I go through them. That I've never done that in my career. I wrap my mind around others that's like, yeah, my client just dropped me off a big old box. I'm like, what are you doing with your time? Like, there's way too much time. You want the business owner to feel empowered to be able to handle this throughout the year, so that they can produce their annual expenses. So this is basically alphabetized here, just for simplicity. And the way that I have the structure also aligns with the tax forms. So I want to open this up for questions, because I can share what I think you want to hear, but I just really want you to get the answers that you're looking for. But just to highlight what a write-off is, the key terms that the IRS references, it's ordinary and necessary for your business. Those are that's how they define a business write-off. What is it? Is it ordinary and is it necessary? And so basically, ordinary means is it common for someone with your type of business that they would have that type of expense? If it's yes, it's a business write-off. Necessary, is it something that's appropriate for your business? And if the answer is yes, there's your answer. I mean, it is as simple as that. It's when people are trying to get to this fine line of could I not? When you're thinking that, it's most likely not, unless you officially sit down with either a certified public accountant, which I am not. I don't want to be fraudulent here. I am not a certified public accountant. I am a certified tax preparer with the IRS. I stay in my lane of taxes. I do bookkeeping, okay? I don't like to be viewed as an accountant, because they have worked hard for that certifications, and I did not want to mislead And so when you are in need of a bookkeeper, I could be someone for you to assist you there. And I do that all in alignment with how that tax return is going to be filed. So that's what I have in my mind. So I'm just gonna open it up for questions. You can go to the next one, just some contact information. If you'd like to stay in contact with me. I do have inquiry cards for follow-up conversations. This does enter you into a raffle. I have a gas card that I'm raffling off, along with a little goodie bag. I have, everyone should be able to walk away with one of these, as well as a business card. And these lovely lollipops for those that have sweet tooth. So, do I have any specific questions relating to business write-offs or business taxes that I can clarify for you today?
The
Yes.
LLC sole provider, how do you know if you're, right? Or sole
Proprietor?
Yeah.
Is it the same thing or is it two different things?
Okay, so so that's a good question. So LLCs can be viewed differently when it comes to being taxed. How you're structured is the LLC, but taxation, you can be taxed as a sole proprietor, which means you're a single member LLC. So you would naturally fall under sole proprietor taxation. If you have a multi-member LLC, you naturally fall under a partnership taxation.
And how would you change it?
Yes, so that can be changed. It's a certain form, it's so many numbers. 2553 is the form. It's an IRS form to change your tax classification for your LLC, and that is how you differentiate what form you need to file and how much taxes you're going to be needing to pay according to that tax structure.
I have a question. I have 2 registered nonprofits and my LLC. So I do all their taxes together or separately? For each
So, are you talking about the time when you file, or like the order in which you file first?
No, like, so I go to you, do we file all on one, or it's like this one?
Okay, so nonprofits have their own
Entities.
returns. So each one will have their separate returns.
Mhm.
The LLC, depending on your tax classification, if you're taxed as sole proprietor, it's going to be within your individual tax return. So we would include the certain forms of the Schedule C for sole proprietor,
Okay.
and then your state document as well for LLC. Now, if it's a S Corp or C Corp, your LLC is taxed as either a partnership or a C or S Corp. There are a separate return outside of your individual return,
Okay.
which you typically will file first, and then you file your individual.
Okay, that makes sense.
Okay, so it's kind of a question for all 3 of you guys. Christina, she's my tax preparer, so, she filed my taxes recently.
Mhm.
I've been a sole proprietor now for 2 years. I want business funding.
Mhm.
So if I were to change now to an LLC, let's say I did it today,
Mhm.
how soon can I get business funding? Would I have to refile with you to, like, change my taxes, or?
No, nothing would change from the
Okay,
past.
it would just be for the following year.
Current, moving forward.
Okay.
Yep.
And then how soon do you guys think I would be?
Tomorrow.
Funding?
You get it today, tomorrow. Yeah, that's how it works. It's like, as long as you're not an S Corp, you can get the money. The thing is, you have to be one of these, entities. They don't want you to
Sole
be
proprietor,
one.
if you're not a sole proprietor.
Yes.
So you said S Corp, so I just.
I mean,
Yeah.
fire, yeah, thank you, yes. And then, Ms. Monique,
One
please.
thing I wanted to mention, I know that you said you were a sole proprietor, which is great, but keep in mind that that's you personally. So you are a liability to yourself when it comes to you being in business. Right.
Mm-hmm.
And everyone in here knows that we live in California. California is such a sue me state. So I highly recommend by January 1st, 2025, you speak to a professional and determine what type of corporation you would like your business to become. Yeah. Because again, you're 2 years in, so you're kind of seasoned. Yeah. So because of that, and then even if you utilize Mary's services, you still have that time in business, even though it's a sole proprietorship, which you already have the business name, right?
Yeah.
And you have the checking account, but it's still under, so you're seasoned, which is great, but just keep in mind to just really look into incorporating your business, because the higher you go up, or the higher you elevate, under that sole proprietorship, you're causing more harm to yourself than good, okay?
I'm the type of person, when it comes to taxes, I don't like paying taxes at all. But I really don't like paying taxes twice, and that's what all sole proprietors are doing.
Yes.
There's the tax bracket, which is 10 to 37%, and then you get a tax the second time, 15.3%. So corporations just have a flat rate if you do have to pay taxes. And so switching from sole proprietor to a business entity also helps you on the tax side as far as how much taxes you're gonna have to pay. You're automatically gonna be paying less once you switch to that. But it does need to make sense financially, because there are fees that you cannot avoid, whether you're making money or not. Sometimes that gets people out the door, like, I don't wanna pay 800. And I'm like, okay, it's like, you have the opportunity to make 800. Think about it like that. You have the opportunity, I'm sorry, let me rephrase that. You have the opportunity to make money, and all you have to pay is 800. It's unlimited. After 800, your income is unlimited. So don't just think scarcity mindset or poverty mindset, I have to pay 800 if I'm a business entity. No, you're in business to make money, right?
Mm-hmm.
Okay.
Can I add to that?
Yes.
That's an asset.
Mhm.
So you paying that $800 is such an asset for your business, because you're protecting your name. Your business is your name, which is your brand. But also keep in mind that there's so many different avenues you can take with your business being a corporation. So yes, you're paying that $800, but guys, realistically, it's one time a year. So if you have a great accountant, bookkeeper, CPA, you know it's gonna be $800 by the time you file your taxes. Put that portion of the funds into your savings account. That's another thing, it's called sacrifice. Of course, it's gonna be a lot of work. Of course, it's going to be a lot of moving funds, but that's your stability.
And once you change over, you're gonna see financial freedom.
Yes.
As soon as you use it, do what we're telling you, use the credit cards, not your bank account.
I have a question for you, I think. It's regarding, so if you have your business account, so who I have my business account through, I have my personal account through, and just naturally they put it all under the same account.
Yeah, because you're a sole proprietor.
Yeah.
That's why.
So in changing over to an LLC,
You go back to the bank and you let them know I'm an LLC now.
separated,
Yeah,
and then I can just start over like the record keeping
Yeah.
from scratch.
yes. And as a matter of fact, you guys, we partnered up with, Edwards Credit Union. They're very big with business. So if you guys need a business account, go right here in the front
Oh,
and
they
then
just
get what you
started?
need.
They just started?
that.
What?
Cause
Yeah,
I banked
yeah.
here, they didn't have business bank account
Nope,
not long ago.
now they do. And they're here, they're local, and it's a credit union. These are